Cryptocurrency has created an unconventional form of wealth, which makes it significantly different from how it was before. Unlike fiat currency, which is a tangible measure of value and paper money used for transactions, only Bitcoin remains as the remaining currency in this new era. Since cryptocurrencies such as Bitcoin are becoming more prevalent, it's important to ensure your real estate transactions are done securely and accurately. Luckily for you, Real Talker, this guide will explore what crypto is, how to get started, and cover the security rules in place for trading with money. Basically, we will see if you can buy real estate with Bitcoin. So let's get started. As people are more open to cryptocurrencies, like cryptocurrency, they beg a few questions. What can you spend the money on when seeing how the prices change frequently? With cryptocurrencies such as Bitcoin or Ethereum, it's possible to purchase home finance with a modest down payment in a matter of minutes. It's also possible to make installment payments and use advanced native features like features on the consumer experience-focused blockchain platform. Now, what is cryptocurrency? In most cases, cryptocurrency provides a secure payment system with no fees on any transactions. It can be used to purchase goods and services, bought and sold in different cryptocurrencies, or transferred to a completely different wallet, all without a third-party service undercharging their particular process, helping the environment at the same time. It's been nearly 3 decades since the last hard fork in technology, which resulted in the creation of Bitcoin. Cryptographic currency has now become a verb, meaning to send or transfer something electronically without needing to use a central bank or institution. Expanding more into crypto, online brokers and app exchanges are now offering investors the opportunity to invest in cryptocurrency. Coinbase is a popular option for both beginner and seasoned investors, although it should be noted that Robinhood, an app designed for investor friendliness, has become very popular in recent months. With so many new platforms coming up that allow cryptocurrency trading, it's not a bad idea to take a break from the traditional stock market. Cryptocurrencies are the ideal new medium of exchange because they cannot be manipulated by big companies, allow for different skill sets, and can be easily transferred between people. So how does this virtual currency work? Virtual currencies work by being recorded on the internet's blockchain, which means they are less susceptible to human error and theft. Unlike traditional currency, there is no need to fear inflation as cryptocurrency has its own method of regulating supply and demand. Blockchains are immutable databases that have been a major cause of conflict between dissidents and authoritarian regimes. With their introduction, it became possible to create permanent digital transactions that cannot be revealed or tampered with by any external source. The reason why blockchain technology could radically change how we interact with and consume data is due to its permanent database, something that benefits businesses as well as users. With Bitcoin, all your transactions are trackable, but they're also anonymous. When using Bitcoin, the addresses available for each transaction can be used as a pseudonym or pen name. Though it doesn't identify you by name, these addresses correspond to their owner's Bitcoin address and are a link connecting their transactions together across the network. With the emergence of crypto suddenly, many real estate developers and governments have developed regulations for this new form of transaction. How are cryptocurrencies taxed? For businesses, cryptocurrency offers new ways of reaching their customers. Even old companies can leverage cryptocurrencies to reach a wider audience. The value of most cryptocurrency is volatile, and thus crypto attracts investors who are just in it for the money, rather than using Bitcoin or any cryptocurrency as an alternative to traditional real money. With cryptocurrency prices constantly fluctuating, buying and selling them makes more sense because it can be difficult to find a current value for many coins. Cryptocurrency is a decentralized system, so there are no points of connections or issuing entities. Because of this, in January 2018, the IRS designated Bitcoin and other cryptocurrencies as capital assets, permitting taxpayers to determine how much tax they owe on the appreciation of such coins. Similar to when the prices for stocks goes up. If you sell an asset and make a profit from doing so, it's considered a capital gain. If you buy and sell an asset within the same year, it's a short-term capital gain. If you've held onto an asset for more than a year and taken the profit from selling it, it's considered a long-term capital gain. Depending on your income, you may be able to save a lot of money from lessening your taxes through a capital gain. Buying and holding properties not only allows you to hold onto assets under a tax-free and low-cost methods, but if tenants pay the property tax liability and rent on time, enough income can come in to put you in a lower tax bracket. And the most awaited part, how to buy a house with Bitcoin. If you plan to purchase a property with Bitcoin, then there are some additional steps that you will have to take first. First, ask the seller whether or not they accept Bitcoin before starting your online search for property listings. Second, once you've found a listing and have confirmed it accepts Bitcoin, by looking for Bitcoin accepted here in the listing footer and clicking through to their site. If the seller accepts Bitcoin, you must negotiate the sale price in Bitcoin. As most countries' governments do not allow the use of Bitcoin, it's hard to find reliable sources who will exchange currency from their country in Bitcoins, because there are so few sources that can accept Bitcoins. If there is a balance of funds at the time of the sale, you must make sure that you have a method for payment which can be converted. Nonetheless, buying property with digital currency is possible, but you will need to consider your individual case, as it's not a widely accepted practice just yet. You'll also need to find title insurance and escrow companies that are okay with handling transactions of cryptocurrency rather than real-world money. If you can find all the above, it's likely that you'll be paying in Bitcoin or Ethereum. There haven't been many instances yet of buyers paying with other types of crypto. Whether you are investing in crypto to gain profit or protecting your future and that of your family, the house is an important purchase. Learning what will work and what won't helps save you time and money. If you ask whether you can sell a property using Bitcoin, it's also possible. If you wish to sell your real estate for Bitcoin, you must first find a real estate company that has experience in using Bitcoin to make real estate transactions, or conduct your research on Bitcoin adoption as well. When listing your property, it is important to determine whether you are listing it only for Bitcoin buyers, or if you are willing to accept other cryptocurrencies and traditional currency. Once your property is listed, buyers will make offers in your preferred currency, and you can accept the offer. Let's go now to the pros of buying a home with Bitcoin. With high demand and low property prices, there is a lot of places where Bitcoin can be used to buy property. However, keep in mind that buying property has to be carefully executed with the right lawyer and real estate agent. With these and various other modifications, buying properties using Bitcoin can be seen as a viable investment opportunity. First on the list, acquirement of a more secure asset. Investing in property gives you a chance to diversify your assets. Nowadays, real estate transactions favor cash buyers who can save on small fees by paying for the transaction without using a bank. Plus, with Bitcoin being the main payment system for blockchain technology, it's like using cash to buy your property. Cryptocurrencies are volatile, meaning they can go up in value or down. If you sold your Bitcoins on the way up, you probably made a profit. But if they dropped in value, your losses could be huge. As the value of cryptocurrency has hit new all-time highs, many investors are wondering where to put their money. The point is daunting if you don't know enough about the market to enter with success. Moreover, real estate tends to appreciate slower than crypto and is less volatile than it. You trade in a volatile asset for something that's much more stable and might become more valuable or last much longer if you do decide to cash out. Second, increased purchase speed. When you use crypto to purchase a home, you do so more quickly than with traditional fiat. Unlike traditional mortgage schemes, the standard commission charged by lenders can be greatly reduced or even eliminated. If you're considering purchasing a home, such as adding to your portfolio by purchasing a rental property, you can make your offer sound more appealing by frequent advertising with crypto. Third, potential discount. Crypto prices vary, but sellers are likely more invested in the technology's potential to become mainstream. They may offer discounts on their house as a way to drum up interest in the currency. Because many blockchain contracts allow for simplified forms of payment, savvy sellers can lower the price to attract buyers. If there are pros, of course, there are cons of buying a home with Bitcoin. First, unfamiliarity with digital currency. Cryptocurrency has grown in popularity, but many first-time users are still wary of creating a cryptocurrency wallet and making transactions. As with any marketplace, when the interest builds, there is usually an increase in the number of scams and skilled con artists who prey on new users. That said, it can be difficult to find sellers, not to mention insurance and escrow companies, that are willing to give cryptocurrency a chance. Many that do understand cryptocurrency still may be unwilling to partake in a crypto real estate sale because of digital currency's inherent anonymity. Even with this critical security issue, users also don't know who their transactions are attributed to. This makes blockchain literal gold in law enforcement investigations, but not nearly as true in online fraud cases where a new fake identity can be created in minutes and financial data can be siphoned out. There are many instances where sellers in the real estate industry may need to verify that a buyer who is offering to buy their house with cash can provide proof of source. Cash offers have been rising over the years, and among other things, they can be difficult to trace. Second, volatile nature of Bitcoin. With the volatility in cryptocurrency, sellers may find it difficult to accept digital coins as a form of payment. These fluctuations in value with regard to cryptocurrencies can lead sellers to not want to entertain the offer at all and endanger the negotiations. For example, if you buy a house for $100,000 with Bitcoin only to see the value drop by 10% the following month, it will now cost you $90,000. If you bought into stocks, the same pattern would not be repeated because the price fluctuations are not as drastic on stocks. If sellers of property wish to sell their home quickly and abruptly, they can accept an offer in the form of cryptocurrency. However, it's not quite what they are used to. So much uncertainty is associated with cryptocurrencies that a decrease or increase in value can make their profit quickly dwindling. And lastly, finding a seller. When comparing crypto listings across multiple portals, you need to consider the commission. Factors such as list length, exclusivity, and history are just a few reasons sellers with longer means of compensation usually get the better contract terms in this market. If you want to receive cryptocurrency as currency for your house, you first must determine if a seller is crypto-friendly. If they are, ask them at a reasonable time. And don't agree on a deal till they've removed any restrictive clauses stating only traditional currency could be used. Home listing sites allow you to filter listings by two key factors: whether the property accepts cryptocurrency and price point. This feature is not as widespread as it is on other listing sites yet because house hunters are also a diverse group of people. Now the question is, how does buying a home with other cryptocurrencies compare to Bitcoin? For those buying a home with Bitcoin or Ethereum, it's only a matter of time before you start having issues. Whether that means you need to buy more cryptocurrency or run into tax problems. Expect to pay with Bitcoin or Ethereum if you have an upcoming purchase that involves buying, selling, or leasing a home with cryptocurrency. Although much of the real estate industry doesn't trust cryptocurrency, you can still find sellers for your Bitcoin or Ethereum. Choosing exactly which coin a seller accepts might be less exciting than finding sellers who take them, but at least you've identified a potential ally. Sending Bitcoin offers might be the best way for sellers to lower the cost of originally accepting them. With an offer or demonstration of 22 Bitcoins, sellers might feel more comfortable at selling their property for Bitcoins. The good news is that many sellers, insurance companies, and other parties will be willing to work with cryptocurrency offers if you cash them out first. You get the bitcoins, they get their money. They sell their house and buy bitcoin or other cryptos when they see the price has gone up or when the market is in need of revival. And to wrap everything up, yes, cryptocurrencies can be used for home purchase in certain circumstances. Investors interested in buying a house with cryptocurrency face some key challenges. Most sellers aren't willing to work with or accept cryptocurrency payment, as it is still poorly understood by many. Buying a house with cryptocurrency has the potential to be the most large-scale and convenient way so far of using cryptocurrency. But the logistics of doing so are daunting. Finding interested sellers requires you to decide which paradigm is more comfortable for you, traditional or crypto. If you have enough cryptocurrency to purchase a home, or there is no point in selling first, it's still a better option to make a cash offer. That's it for this video, Real Talker. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon.